Okay, three things you need to know before you start trading the stock market. First of all, what type of trader do you want to be? Now essentially there's four different types of trader, and these are stock trader, a forex or foreign exchange trader, and the two more advanced options and futures traders. So let's have a look at each of these in turn just quickly. First of all, stock trading. This is what everybody seems to have done. You buy a stock, you wait for the price to go up, you then sell the stock and you profit from the difference. Now the thing about stock trading is you don't actually need much money to start trading. It's quite easy to do, but the disadvantage is it's overwhelming because there are thousands of stock tickers to choose from, loads of companies and institutions, and this can be quite overwhelming. So let's move on. Next there's forex trading, which is foreign exchange trading, and here you're actually trading currencies, not stocks. So it's not companies, it's literally currencies, and you always trade one currency against another, and these are denoted by having three characters separated by a slash symbol. So euro pound would be EUR stroke GBP. Now foreign exchange trading is easy to set up, and the advantage is that there's actually only a few tickers or currencies to trade, so big advantage, fewer tickers to sort through. Moving on to options trading, this is a lot more sophisticated, and if you're into maths, this is the thing for you. Lots of tables of figures of things to choose and filter and sort and so on. So if you're into that, options trading is probably the sort of thing for you. It involves buying and selling calls and puts, which are contracts that control 100 shares. So it's like buying blocks of 100 shares and trading with them. If you buy a call, you're expecting a rise in the price of the stock, and if you buy a put, you're expecting a fall in the price of the stock. Advantages? Well, you can do lots of strategies with calls and puts where you buy pairs of them and trade them off against each other, and this gives you a regular income. But the disadvantages are that you need a lot of money to fund this. Moving on to futures, this is where you're essentially betting on the future price of certain commodities, and the commodities are things like metals, energy, livestock and agricultural. So for instance, if you're betting on the price of gold in the future, you use the ticker symbol @GC. The advantages are that you can make a lot of money quite quickly this way, but you can also lose a lot of money quite quickly. So the disadvantages are it's quite complex, rather like options trading. You need a lot of money to open the account, and you also need lots of trading experience. It's the sort of thing you don't go into straight away. Now, on to the second thing. How much money do you need to set up each of these trading opportunities? Well, when you open an account, you'll find that when you're dealing with stocks, you can trade from as little as, say, $100 and open up an account and everything's fine. Forex, you probably need about $1,000 to trade reasonably well, but the other two, options and futures, you need an awful lot of money because you need to cover yourself in case something goes wrong, and this is mainly to protect the broker who you open the account with, not you. And finally, on to the third thing, which is what time frame of trader are you? This again falls into four categories, and they are scalper, where you are in a trade for literally seconds and minutes, day trader, which essentially means you open up a trade in the morning, say, and you close it out before the end of trading that day. A swing trader, you can be in a trade for several days to several weeks, and a position trader where you're trading for weeks and months. No one is right. They just have different strategies and different ways of trading. So there it is, the 3 things you need to know before you start trading.